Presented by eBix Cash. हर खुशी के लिए काफी है.
Hello and welcome. You're with us here on Business Today. I'm Aabha Bakaya. Here are the headlines tonight. Markets trade lower for a second consecutive day. Sensex plunging 656 points. Nifty ending below 18,000. IT, FMCG drag. Metals shine. Jio pays nearly 31,000 crore rupees to clear bulk of spectrum dues. This prepayment would lead to a cost saving of 1,200 crore rupees per year. Bharat Pay founder and MD Ashneer Grover takes voluntary leave until end of March. Announcement comes amid an ongoing tussle between Grover and Kotak Mahindra Bank. Microsoft makes the biggest acquisition in history. Company buys Candy Crush and Call of Duty maker Activision Blizzard for $68.7 billion in an all-cash deal. It's also the largest ever deal in the history of the gaming industry. Coal India's coal dispatches under e-auction jumped 31% during April to December 2021. The premium over notified price in e-auctions increased almost fourfold to 58%. Stock markets continued to languish for the second straight session. Nifty tumbled over 170 points to fall from the 18,000 mark. Sensex 2 tanking over 650 points, barely holding on to that 60,000 mark. So what dragged indices lower? The sell-off was prompted by concerns over US interest rate increases, rising crude oil prices, and growth in COVID-19 cases globally. December quarter earnings made it evident that higher input costs have started pinching profit margins. FIIs continuing to sell also hurt sentiment. Selling was seen in select index heavyweights including IT and FMCG companies. Top laggards today included Infosys, Shree Cement, Asian Paints, Adani Ports and HUL. Airlines in the US are in a face-off with mobile operators like AT&T and Verizon over the deployment of high-speed, fifth-generation mobile networks around airports. The issue has also impacted Air India, which has cancelled flights to the US because of safety concerns. US Federal Aviation Administration has warned that potential interference by 5G network signals could affect height readings that play a key role in landings on some jets. Here's more on the story by Business Today's Jinuk Sen and Karishma Sudani.
Airlines in the US have been thrown into a loop, thanks to the plans by telecom majors to launch 5G mobile services. Airlines have warned that thousands of flights could be grounded or delayed if 5G services are rolled out near major airports, as 5G interferes with key instruments on planes, including the Boeing 777 models. So, what is the issue?
Tomorrow is the deadline. Our objective is, of course, to reach a solution around 5G deployment that maintains the highest level of safety while minimizing disruptions to passenger travel. That's what we're working towards.
A group of US-based airlines, including United Airlines, American Airlines, Southwest, Delta and FedEx, have written to the US aviation regulator warning that 5G deployment could cause a catastrophic aviation crisis. The group also said that 5G could be implemented everywhere in the US except within 2 miles of airport runways. The new 5G wireless services that AT&T and Verizon are rolling out utilizes a segment of the radio spectrum that is close to the spectrum used by altimeters in airplanes. Altimeters are devices that measure the height of the plane above the ground.
Well, Indian carriers like Air India had to revise and cancel its certain flights to United States of America. Besides Air India, United Airlines and American Airlines are two other carriers that operate flights between the United States of America and India. But the bigger and the broader debate here and a challenge is going to be for India in the coming year because of the 5G trials. In fact, Bharti Airtel, Vodafone Idea and Reliance Jio are currently testing their 5G networks in 3.5 gigahertz spectrum band, and it is going to be by next year that 5G could soon be a reality in India. It's a bigger task and challenge for Department of Telecommunications and DGCA under Ministry of Civil Aviation to resolve these technical glitches before, of course, 5G comes into implementation in the country.
With Karishma Asudani, Bureau Report, Business Today Television.
In a deal that's set to trigger a battle for the future of gaming and the metaverse, the Satya Nadella company is acquiring gaming firm Activision Blizzard for a whopping $68.7 billion. Activision is a US-based game developer of famous games like Call of Duty, Candy Crush and Warcraft, among others. Tech Today editor Ayush Alawadi joins in with details of what this deal really means. Ayush, it's a massive acquisition, and while these games are immensely popular, tell us what it's really all about. Is it a gamble for winning the metaverse race? Or is it more to do with Microsoft's battles against Facebook and even Sony?
Spot on, Aabha. Actually, it's a mix of both. There's two plays out here, two strategy plays. There's one big play in the metaverse and the second one when it comes to gaming. Now, Microsoft clearly wants to take on Facebook or Meta and Sony when it comes to the gaming space. But what's important to note over here is that this makes it one of the biggest tech deals ever, makes Microsoft now the third biggest gaming company, so to speak. And there's a lot of complications when it comes to how Activision will now operate once the deal does go through. And I'll issue a few clarifications out there that have come from the company as well. But what's clear with this is that Microsoft is crafting its own path for the metaverse. What Meta is doing is different. What the other companies are doing is different. Epic is doing is different as well. The metaverse and a lot of believers of the metaverse say that, well, gaming companies like Epic and games like PUBG and Fortnite actually preceded the metaverse as a concept. Now, the jury's out on that. But when it comes to the tech giant Microsoft actually purchasing, well, and going ahead with this deal, the tech giant has actually tried to buy TikTok before, but they don't have much of a presence in the social media space. They purchased LinkedIn in 2016 for around $26 billion, and the jury's still out on that. But they're pulling in nearly $10 billion on that particular acquisition every year. And that's the closest they get to the social networking space. In India, if we look at Facebook, which is their nearest competitor, Facebook has nearly 350 million users. LinkedIn has 82 million, just after, India features just after America in that list. And India is by far the largest market in terms of an audience size for Facebook, the second largest for LinkedIn. In terms of what Facebook is trying to do in terms of penetrating the Indian market, we need to realize that Geo Platforms is something that they have invested in, nearly $5.7 billion. And with that, they hope to leverage the Geo network and the strength and the reach of that network to reach out to more Indian households, gamers, and the like. But when it comes to the gaming space, you mentioned Sony, and that is a worthy competitor because for gamers, it's always been Sony versus Microsoft Xbox versus the Sony PlayStation network. Both of them have been putting in millions of dollars when it comes to acquiring companies to build on their cloud gaming departments. Now, Activision Blizzard, which is a leading game developer, has nearly 400 million monthly active players in nearly 200 countries. So they're massive when it comes to that space. They have games like Call of Duty, Warcraft, and even Candy Crush, which a lot of us have played on social networks before. What does this mean for that? Because Activision has their titles on Sony devices and on Microsoft devices as well. So Indian gamers are quite crazy about these games. And does that mean that in the coming years, Activision would pull off those titles from the Sony PlayStation network? Well, it remains to be seen. But for now, this is one of the biggest deals in the gaming community. And all of us from the gaming community and tech enthusiasts are watching with bated breath to see how this unfolds over the coming years and days to come.
Absolutely. Thanks so much for joining us on that mega acquisition, Ayush. In good news for consumers, after a coal shortage in October last year, Coal India's supplies under e-auction logged a 31% growth during April to December in 2021. The company's actual coal dispatch was at 77.4 million tons compared to 59 million tons the corresponding period a year ago. The volume increase in supplies was achieved even though Coal India pumped an all-time high of almost 391 million tons of coal to thermal power plants during the period. As per the company, even after supplying record volume of coal, the dispatch to non-power sector stood at 91.1 million tons, almost at par with the same period last year. The company's stock gained post the news to become one of the top Nifty gainers in today's trade. And here's what else is making news in the corporate world. Bharat Pay co-founder and managing director Ashneer Grover announced that he is taking a voluntary leave of absence from the company until the end of March. The announcement comes amid controversy over Grover's alleged use of inappropriate language against Kotak Group staff. Mahindra Group and Hero Electric announced their partnership in electric mobility. This collaboration is part of Hero's growth and expansion plans. The strategic partnership will create multiple synergies to help drive adoption across the country. The deal paves the way for Mahindra to manufacture two of Hero's electric bikes, Optima and Nix, at its Pithampur plant. Ahmedabad-based Landmark Cars, a leading premium automotive retail business in India, with dealerships for Mercedes-Benz, Honda, Jeep, Volkswagen and Renault, has filed its draft red herring prospectus for a 762 crore rupee initial public offering with SEBI. According to the draft papers, the issue consists of a fresh issue of equity shares aggregating to 150 crore rupees and an offer for sale of up to 612 crore rupees. Jubilant Foodworks, the franchise of Domino's Pizza, has launched US fried chicken brand Popeyes in India. The first restaurant opened in Bengaluru. Popeyes will open 2 more stores in the city. The brand will also have its mobile app and website. We continue to look at sound strategy at a time when markets continue to be volatile with the context or backdrop of a fresh wave of COVID, what could possibly happen by the Fed, what kind of moves they could make, and at such a time, how you can smartly adopt your portfolio. Let's get started with some of those questions. Remember, you can keep sending them to the number on your screen as well, and we'll take a select few every Wednesday. Mukesh Gokhale from Mumbai has a query. Let's listen into this.
I have bought 50 shares of Schaeffler India, around 7,100. I had bought it in view of the corporate action. Is it still a hold at this price, or should I profit?
Well, you are sitting on a couple of thousand rupees of profit out there, but I think while you did buy because of a corporate action event, I think it's a good one to keep in your portfolio, having already acquired it. Because as you know that it's the erstwhile FAG bearings, Schaeffler, but it now has a very good parentage in Schaeffler and a good transfer of technology coming in from there for the launch of new products. And I think Schaeffler's got a good mix of businesses. The auto business where it makes a lot of engine parts and transmission equipment for auto OEMs, but it also has a very good industrial business where it makes a lot of electrical fittings for non-auto companies and even the railways. And I think the two parts put together, the auto and the industrial parts, together make up about 90% of Schaeffler's business, which is growing at 25% plus every year. And I think they will continue to grow at that kind of a clip. Not much debt in the balance sheet. It's excellent return profile, return on equity of in excess of 20%. Good parentage, as I said. And the only problem is the stock is up 70% over the last 1 year. So it could consolidate from time to time. But it's not a wildly expensive company. I think it trades at about just around 30 times 2023 earnings. So for a company with MNC pedigree, with the kind of growth metrics that I just spoke about, and diversification of business, I think you would pay that much for that kind of a name. So I would say there should not be any major hurry to dispose of the company. If you're a longer term investor, this is the kind of stock you could easily own in your portfolio.
All right, let's also go across to Sahin Sheikh from Berhampur. He's got a question on Happiest Minds.
Hi Udayon. Currently, I am holding the Happiest Mind technology stock and plan to hold for a long term, like a decade or 20 years. Is it right stock to hold for a decade? Please tell me.
Well, a decade's a nice kind of a horizon, though I think periodically you'll have to check how the company is moving. Speaking of a decade, the owner of the company, the promoter of the company, Ashok Soota, told us just a couple of weeks ago that he intends to grow, or he's projecting that the company will grow its earnings by more than 25% over the next 10 years. I mean, that's a bold statement, and 25% growth over 10 years means the stock goes up 10x just on earnings. So I think it's a good company. And part of the growth comes in from the fact that, it's a smaller company. The Infosys and TCSs of the world are so large that the base on which they have to grow is humongous. Happiest Minds is just a $150 million technology company. So, it doubles its revenue or profits. It's still a $300 million company. So I think it's got a long runway given its size, and it's a pure digital play. So that is a basket, or that's a market which is really growing very fast. And a pure digital play company should be growing at faster than industry growth rates. So the only problem is valuations. I mean, you would have noticed that a company of the pedigree and parentage, promoters of Happiest Minds' quality, has actually done nothing for the last 6 months. It's actually down on a 6-month basis when IT as a sector has done so well. And I think part of the reason is between Jan and July last year, the stock actually went up 4x from 350 to 1600. And I think it's therefore spent the last 6 months just consolidating those gains and has not delivered any returns. At some point, earnings would have caught up and the stock will begin its upward trajectory once again. So I think for a patient investor like you should not get nervous about this 6 months of no returns.
Ashok Gupta from UP has a query on Voda Idea, which also has been very much in the news of late. Let's listen into this.
जी, मेरा नाम अशोक गुप्ता देवरिया उत्तर प्रदेश से हूँ। सर, मैं वोडाफोन आइडिया का कुछ शेयर लिया हुआ है। सो अभी इतना बड़ा फॉल होने के बाद मैं इसमें क्या कुछ शेयर ऐड कर सकता हूँ या एग्जिट हो जाऊँ सर? यही जानना चाहता हूँ।
Vodafone Idea is such a volatile company. It's very difficult to say whether you should be adding right now because something significant has happened a few days ago with Vodafone Idea. The fact that the government of India is now a majority shareholder in the company with a 36% stake because of the equity conversion which has happened. So while it's not a government of India enterprise in that sense, because Vodafone and the Birlas still own substantial stakes, the fact that the government is the majority shareholder or the largest single shareholder, I think it probably is making investors a bit nervous in the market because the government could interfere with the actions of the company at many levels. A lot of investors who potentially might have got into this company will probably stay away. And I think it takes away a little bit from the prospects of Vodafone Idea in one sense. So my best guess is that, the stock has corrected from 16, 17 levels back down to 12, 13 kind of levels. I think it probably remains in a range of say 11 and 15, that kind of a price range for a time. The good thing is that things are improving in the telecom business, telecom market, because tariffs are going up and ARPUs, or average revenues, need to go up for Vodafone quite significantly because it is still very, very cash strapped. So I don't know, I won't have any trading advice for you, but I think, as I've said before, that if you want exposure to an improving telecom market in India, Bharti remains your best bet. It is not Vodafone Idea.
Okay, one more today, Udayan. Saurav Seth from Bhubaneswar has a query on Bandhan Bank.
Hi Udayan, this is Saurav Seth from Bhubaneswar. I have 400 Bandhan Bank share, average cost price around 370. Should I hold it or sell it? Thank you.
Well, Bandhan is not probably the best financial stock to own at this point in time because banking as a segment has been a bit of a laggard through 2021. While there are signs that it might do better this year, I think Bandhan's problem is that it has got a fairly significant exposure to the MFI business, the microfinance business. And that is probably one of the weakest areas of the financial space to be looking at this point in time, because there are issues with collections. The repeated COVID waves are not helping MFI institutions at all. And Bandhan, you're paying at this point maybe something like between 2 and 2.2 times book, FY23 book. At more than 2 times book, you could get much better financial companies in the market today, given that the space has underperformed. If it was buying Bandhan at 0.8 price to book, that might have been a different story. But at 2 plus, I think you've got a better choice in the market, which is better choices which are not exposed to the MFI business. So Bandhan can continue to do well, especially if the financial space recovers this year. But I think you will get better returns from some of the other private financial companies. The best NBFCs and the best private sector banks will probably do better than Bandhan.
Udayan, also wanted to ask you, while there is so much focus on some of the service-related, consumer-oriented stocks, what about retail? There's really not that much talk about, some of the limited offerings when it comes to retail in the market, in the publicly listed domain. Would you be bullish on that sector?
What's going on, Aabha, is that all these repeated COVID waves which are coming, I think they're taking some of the sheen of the valuations of this sector. Because you'll recall that over the last few years, stocks like Relaxo, Footwear or Bata have been fairly significant performers in the market. But I think their performance has stalled a little bit because consumption in the B and C cities and in the non-urban areas, they are taking a little bit of a hit. So I think those concerns remain, which is why some of these retail consumption oriented plays have not done as well as they have done in previous years. So I think that overhang remains in the market until we get to the second half of this year and we get a clear handle on whether urban and semi-urban consumption is picking up once again. I think that is the time when some of those names begin to perform once again. Till then, I think discretionary consumption is something which the market might remain slightly skeptical and cautious about.
All right, Udayan, thanks so much for that. We've covered a whole gamut of stocks today. And if you would like to send in your queries, do continue to share them with us on the number on your screen.